Today, a lot has certainly happened on this Friday, but one of those is what's going on in the gold market right now. You have the Trump administration ruling that gold bars will be subject to tariffs as well, these reciprocal tariffs. So imports of gold will be tariffed, and that's really sending shockwaves through the gold ecosystem. Gold and Bitcoin are also often compared to one another. Bitcoin called digital gold, for example. I wonder if you think this has any ripple effects, positive or negative, for Bitcoin.
It does. Bitcoin is digital gold. It's going to accelerate the migration of capital from physical gold to digital gold. Bitcoin lives in cyberspace, no tariffs in cyberspace. The big appeal of Bitcoin is it's not physical. It doesn't have weight. You can settle anywhere with anybody in a few minutes. And so gold has always been too heavy, too slow, and you can't really ship it across an ocean. And if you do, now you're getting tariffs. So I really think it just reminds everybody why the digital version of gold is better than actual physical gold. And I think it's going to catalyze a new wave of institutional adoption of Bitcoin.
All right. Crypto is stateless. It's hard to tariff. Michael, have to leave it there. Really enjoyed speaking with you, though. That is Strategy Executive Chairman Michael Saylor.
Happy Bitcoin Friday, freaks. It's your host, Odell, here for another Citadel Dispatch, the interactive live show focused on actionable Bitcoin and freedom tech discussion. As always, the show is brought to you ad-free and sponsor-free, purely supported by viewers like you with Bitcoin donations. The easiest way to support the show is by going to primal.net/Citadel, where all videos are posted after the live stream ends. The two largest zaps over there was from Ride or Die Freak Mav21 with 10,000 sats. He said great rip. And Trazen with 10,000 sats. They were tied, so they both get a shout out. Thank you for your support. The other way you can support the app is through podcasting 2.0 apps like Fountain Podcasts, which you can search in your favorite app store. Highest zap over there was from Trevor Agora with 20,000 sats. He said off-grid mesh networking and Bitcoin. This is how it should be done. Thank you, Odell, for staying true to the principles of Bitcoin and taking it to its highest level. Thank you, Trevor, for your support. It keeps me going. If sats are tight, if Bitcoin is tight, it is the hardest money in the world. A great way to support the show is to share it with your friends and family. Citadel Dispatch is available in all your favorite podcast apps by just searching Citadel Dispatch. All relevant links are at citadeldispatch.com. I see we have Average Gary in our Nostra live chat. He zapped 5,000 sats. He says way easier to zap in the stream. And I just love the live chat dynamic is a key part of Dispatch that makes it unique. I saw someone complaining on Nostra the other day that they did a podcast and it was never released. Well, one of the beautiful things about live shows is that they are all unedited and unfiltered. Anyway, with all that said, I have return guest here, my colleague at TEN31, our resident quant, John Arnold, here for we're going to do TEN31 quarterly updates, market updates. How's it going, John?
Doing well. Great to be here on the leading gold podcast.
The leading gold podcast on the internet. Yes,
we're pivoting to gold.
That intro clip was Michael Saylor talking about the gold tariffs that were announced today. It's going to be our first topic. I always did say that probably like the worst case scenario of dedicating, the last 12 years of my life to Bitcoin would be if we were directionally correct, but the world moves back to a gold standard and Bitcoin just gets left behind.
Yeah, it's something I don't enjoy thinking about. Fortunately, I think it's sub 5% chance that happens. We may well move back to some sort of gold standard, but I don't think that world is one where Bitcoin price is only 6 digits. I think it's 7+ digits in that world.
Yeah, I mean, I think the most likely scenario is that they both coexist and thrive, right?
Yeah, um, and it's that's the easiest transition state I think you can imagine for global central banks, global federal treasuries to leg into some kind of Bitcoin exposure and position, and like whatever that means, whatever that looks like, to have Bitcoin be the digital gold analog that everyone can kind of wrap their heads around until the boomers fully age out of those institutions.
I mean, we
So
get closer. We get closer every day to them aging out. I mean, so what are your thoughts? Let's start with these gold tariffs that were announced. What are your thoughts there? I mean, Saylor boldly said that Bitcoin cannot be tariffed. It's better than gold.
yeah, I mean, I think a couple things. First of all, we need to be careful what we wish for uh, with Bitcoin not being subject to tariffs. I think he is technically correct, but we have a president and administration that seems interested in finding ways to tariff everything, even if some of those tariffs literally don't make any sense. So we need to avoid inviting American only Bitcoin into the chat if we can. But the other piece that I'll just, before we talk about the substance of that, it blows my mind how it's 2025. We know everything we know about Bitcoin and every other digital asset, air quotes, right? And this Bloomberg anchor, and I don't want to rag on her too much because I actually think she's one of the better ones out there. But she spends 5 minutes talking to Saylor uh, about Bitcoin as digital gold. She knows she's talking to one of the most noteworthy Bitcoin maximalists that there is out there publicly. I mean, some would say he's maybe still a fiat maxi, but in any case, one of the biggest Bitcoin devotees, right?
He's the
And
most famous Bitcoiner,
the most
period.
famous Bitcoiner, right? Except for maybe Trump, depending on how you look at Trump's Bitcoin allegiance. But she wraps up the clip. She says, "Thanks, Marco, for coming on. Crypto is stateless, right? Like, there's just this like reflex that people in mainstream media and academia and financial institutions still can't avoid just pivoting back into calling, when they're in a fully Bitcoin oriented discussion, all they want to do is lump that into broader crypto. And it's like you see it with like, it's not as bad now with some of the language models, but as recently as a few months ago, I'm sure people listening have, if you've tried to play with any of them, have conversations about any Bitcoin related topics, it's amazing the work you would have to do to prompt the LLM not to talk about crypto or digital assets, right? Or Web3 or DeFi. Like you have to, construct like an essay linked prompt to tell it that you're not interested in any of those topics and you want to talk about Bitcoin exclusively. So all that is to say, we still got our edge, still got a long way to go to stamp out the noise and make sure only the signal is what people discuss. But
I mean, it remains one of like the single best filtering mechanisms when you're talking to someone for the first time on where they actually stand and what they understand and what they don't if they use crypto instead of Bitcoin. I mean, we see it in our investor calls all the time. We see it when we're screening companies in terms of potential deals to make. But I would say that, I mean, if you've been watching Saylor, there was a deliberate change that happened as it became obvious that Trump was going to win, and he started saying crypto himself. And I think it was because he realized the stablecoin lobby. He wanted to make sure he was like on point with the stablecoin lobby, and he brought them into the fold and started saying crypto a lot. Because for a while he was pretty good about always just saying Bitcoin, Bitcoin, Bitcoin.
Yeah, he does. What's that phrase that he'll use? Like the crypto economy. Like I think he brings up a lot. So yeah, he has pivoted slightly he's expanded the tent. I think you're exactly right for stable coins and for USD dominance, extending that globally. But yeah,
I mean,
so
go on.
ahead.
I was going to say on the front of on being careful what we wish for, like governments can very clearly tax the shit out of Bitcoin They are doing it in various ways already. Tariffs are just another form of tax. I mean, we obviously have cap gains tax that adds a significant mental burden, let alone financial burden, on using Bitcoin as a medium of exchange for transactions. And then, I mean, on the tariff side, like, you could tariff miners, you can tariff different hardware, you can tariff all different sorts of things. So they can come up with new schemes.
You could do, I mean,
No.
think about, I mean, like, only American KYC mining pools have certain like
Yep.
privileges and like, are not subject to some sort of like OFAC censorship, right? Or attempt at that, right? It wouldn't actually affect the network in any meaningful way. And Bitcoin will go where it's treated best. But yeah, like as Americans, I would rather that we not have to like fight through illogical, tariffs on Bitcoin, whatever that would ultimately mean in practice. So yeah, let's avoid that. But
back to gold. This is a gold podcast. So
this, right, exactly.
What are your thoughts on this recent move? Because you were a little bit ahead of it. I mean, you shared a piece from the Fed maybe yesterday or 2 days ago, right before this announcement was made.
Yeah, it was a couple days back. I think I retweeted it. I know I put it in our 1031 chat. I mean, I got it from the gold goat himself, Luke Groman. So it's mostly just me passing on Luke's alpha. But yeah, a few days ago, interestingly, the Fed posted on its website, I think this was like August 1st, just like an overview, like an innocuous, like inconspicuous overview of historical periods where central banks or federal treasuries have revalued asset holdings, primarily gold. So if they've had gold on the books at historical valuations, how has it worked, and what has happened when they've marked those holdings to market, and what are the mechanisms behind that, and what are the downstream impacts. It's very like I haven't like gone into it deeply. It's a fairly like wonkish like thing that was buried on their website. But that's exactly like, it's interesting, like, because if we were going to if the Fed / Treasury, like, you kind of have to plus ultimately Congress would probably have to be involved, but like if some nexus of like federal agencies were going to revalue gold, which for those who, if you're listening and you don't know what we're talking about, the U.S. currently holds some large amount of gold. Theoretically, we never got the audit at Fort Knox, but like let's assume that we hold the gold that we think we hold, marked on the books at the historical price of $42 an ounce. That's never moved from an accounting perspective. And there's theoretically this like latent opportunity to, through just the accounting trickery, basically, to revalue that, to acknowledge its market price of, call it like $3,500 an ounce now. And through kind of a note that would be issued from Treasury to Fed, basically create close to $1 trillion of newly created money in the TGA, the Treasury General Account, that they could use to do whatever. It's like a new Treasury slush fund, basically. That option has been floated before historically at different times. I think gold bugs have talked about it for a long time. Has never been obviously exercised. And earlier this year, Bessent was kind of asked about this in a Bloomberg interview. Treasury Secretary Scott Bessent was asked about it, and he said, well, I'm not thinking about that right now. And in politics, it's important to never believe anything until it's officially denied. So that pricked my ears up a little bit. And then, yeah, like, fast forward to this week, you see this memo posted, this wonky like policy memo with no fanfare. Like, it's not something that they were like promoting on Twitter, or no one was on CNBC talking about it, just kind of buried in the archives, but slowly like trickles around, matriculates through different like, academic and financial spheres. And that to me is like, that's interesting, because it's exactly how you would start to do like the predictive programming on something like this. I feel like, you would drip little like suggestions over time, pointing to something like this happening. So
Did they specifically mention Bitcoin in that?
No. I'm 99% sure that one.
It was just about repricing the gold.
It was just repricing gold. Yeah, I'd have to go back and look, but I don't think it had anything to do explicitly with Bitcoin. But it's interesting because like they've Bessent has said they're not going to do it. I think maybe Powell was asked about it as well, like conceptually earlier this year, and kind of just blew it off and said like that's not even ultimately their call. And I mean, he's right; it would have to, at least theoretically be an act of Congress. I mean, we've increasingly, we're it looks like we're kind of merging all three branches of government into one, for better or worse. So maybe we could get around that in some way. But I found it interesting, shared it with you guys, kind of retweeted on Twitter, just because, again, like it's a subtle like shift in the talk track. If now we're, apropos of nothing, acknowledging and talking about like the ways that this has happened in the past and like the pros and cons of it and the mechanisms behind it and everything, for them to just kind of like do the subliminal messaging of like, hey, here it is, and then let it trickle out slowly.
So I mean,
that was
I
this week.
guess like the high level thought here is that you tariff Swiss gold refinement, which would drive up the price of gold, which would create some kind of gold type of shortage situation where people would speculate and the price would increase, and then you reprice at the higher price, and then all of a sudden you have quote unquote so much more money than you had to begin with.
Yeah. So to be clear, also that memo didn't outline like anything about tariffing international gold supply. It was all just about like what would happen if theoretically, not even proposing that the U.S. should do it, but just here's how this might work.
We're combining two pieces here.
Yeah, exactly. So like you could do this today. You could have done that yesterday, right before any of these like Swiss gold tariffs were announced, and get the $1 trillion benefit. I think the way that they might be combined, and this is like entirely speculative, and a lot of it's like schizo Bitcoin Twitter, gold bug Twitter, like rabbit hole stuff. But theoretically, you could engender a short squeeze on the gold supply by making it really hard for. So I guess as context, the Swiss bars that are refined that are now subject to the tariffs are, I think, like primarily what is accepted. Like I think they're like what are they, like a kilogram? There's some exact like weight that
like the standardized bars.
The standardized bar is what's accepted to settle gold contracts at the New York COMEX. And so I think the idea would be, if you make it very difficult for those contracts to settle for some amount of time, right? And this is probably be like, this could be tied up in courts and in different trade organizations will lobby you in different ways, whatever. But like, if over the next like 6 to 12 months you introduce kind of a shock to the system that makes it harder for physical gold to move around to settle contracts, do you potentially set off like a short squeeze of outstanding contracts? And does that create a...
I mean, if it's extended for a significant period of time, I think it's like floated out like 30% or something. Then to be able to get physical to settle, you would need like a 30% price increase.
Yeah, right. And there might be reflexivity to it as well, right? Depending on, I have no idea like the the outstanding like positioning is for among all these guys, but if it becomes prohibitively expensive for some like period that is indefinite and no one knows like when it's gonna when it might settle out again, whether either like the tariffs themselves get overturned or just like supply finds its new equilibrium, and you don't know how long that's going to last, and you have some short position, like theoretically like the price move could be like arbitrarily higher than just that like 30-40% level. So basically the idea is like, could you engender like a short squeeze, some extended squeeze that adds a lot of price momentum to gold, and you squeeze the most juice that you can out of this move if you were going to do it? Because it's kind of like you only really get to play this card once. And I think some of the theorizing has been that, I mean, I guess technically every time you could always keep like marking it up to market and kind of creating new dollars that way, but you're not going to get like some huge like juice out of it most likely every time, just because the deltas aren't going to be as big. So if you're going to play this card, like you want the max like juice you can get out of it. So maybe like that the Swiss tariff thing combines with the idea of a gold revaluation to add meaningfully to the TGA and expand liquidity in kind of a free way that isn't exactly QE. Like it's effectively like QE, where they're just buying. Their Fed is essentially buying gold instead of buying bonds in some sense. But it's a lot more politically palatable. It's a lot more like logical also, I would say, just to say, well, this is the gold that we've had for however centuries or however long it is, or since we confiscated it from the French, and whatever the case may be, and we've had it for so long, and so it only makes sense to market. But in any case,
I mean, so first of all, I mean, I think it's a perfect example of how inferior gold can be, specifically in terms of gold markets are very centralized and very vulnerable to this type of action compared to Bitcoin that's trading 24/7, 365 around the world, highly liquid markets. Very easy to settle, right? Any person can settle it, at home with a cold card, um, or like a software wallet on their phone.
yeah.
But do you have a good answer for me? I feel like no one's given me a good answer for the rationale for marking our gold at like $40 an ounce to begin with. Like, it just seems so dumb. Like, imagine you're running a business and you're like you're holding a huge amount of some asset and you're pricing it off of like 60-year-old prices. And I don't understand the positive of doing that. Like, why not just mark it up always?
So I don't have a great answer. The ones that I've heard that I think are the most compelling are, if from 71 onward, when the Nixon shock happened, we basically said, the dollar is untethered to gold, and stop asking for your gold back. Like, you're not getting it. We're not in any way acknowledging like the link between the dollar and gold, and to allow it to be marked at what the market deems is in some sense like an acknowledgement that the USD, that like we did the Nixon shock, and we rugged the entire world, right? Like, it's politically sensitive. There are some suggestions that perhaps there are claims on the existing gold stock, among like European trading partners and others that from whom gold was confiscated, potentially, that if you were to mark that to market, you're opening up the can of worms of your trading partners, demanding gold back or access to gold that you have. So are you like opening up, the potential for having to repatriate that, or having to have whatever conversation ensues from that? I think, to me, the most like strategically interesting response would be, and this isn't original to me, I can't remember who said it, but I alluded to it earlier, that this is a card you only really get to play once. And so I think you want to just get the absolute max juice out of it. And I don't know that, like, for the last 50 years up until very recently, like, we didn't need to do this, right? Like, we had the fiat reserve currency of the world, we had the money printer, we had the petrodollar, we had the ability and carte blanche to just print treasuries, to fund the government kind of and American society, at will, with basically no consequences, for a time. We're seeing, I think, now the long running buildup of those consequences kind of come home to roost. But like, for if in like the 80s, 90s, 2000s, like, what is really the upside of doing it, right? Like, you have
It was just
no.
like good accounting.
Yeah, but like, I mean, I don't know, like, it, to
Just
the
like
extent.
responsible accounting.
Yeah,
It
because
kind of reminds me of like so like we had the Sailor earnings call last week, and like all the analysts were saying that they were going to have a 12-cent loss, but this was the first quarter where they could mark to market their Bitcoin holdings. And so it was really like a $40 earnings per share when you included Bitcoin earnings, and the stock dumped on it. And it was because, even though that's how the accounting used to happen, like, anyone with a brain knew how much Bitcoin they said they had and could do the math themselves. So it was priced into the market. And it's kind of the same situation here. Like, if the gold actually exists, like, no one's doing the multiplication at $40 an ounce, right? It's like we're all doing the accounting separately. So it's kind of retarded. It makes no sense.
Well, if there's one thing that the federal government is known for, it's logical and reasonable accounting
Yeah,
and
exactly.
fiscal policies. So that's a piece of it. But I think the delta is the key, right? Like if it's 42 and the market goes to is pricing gold at 500 or 1,000 or 2,000, like the higher that goes, like the bigger that trump card is, like no pun intended, that you can pull out of
Right.
your pocket when you need to. And if again, like in the 80s, 90s, 2000s, like we just fundamentally didn't need to pursue the policies that the federal government wanted to. The world was fine to just gobble up U.S. Treasuries and allow us to have like a 40-year kind of secular downtrend in interest rates and do forever wars and pay the boomers as much as they needed out of Social Security and do everything that we wanted to do from a domestic. You have both guns and butter, right? Have all the domestic and foreign policy that we wanted, basically for essentially free for a time. Now you're actually hitting some kind of like budget constraint, right? Like, foreign central banks haven't bought treasuries on net in like over 10 years. The Fed has not been able to sell long end treasuries from its balance sheet in, I think, about the same amount of time in any meaningful amount, right? So you're running up into some like constraint of demand on kind of the long dated issuance side, which is why you're seeing an increasing move in the last like 5 years to the short end. And so I think what that's telling you is like, okay, now we might actually need to play the card. Like now there actually is, you're running to some extent into some kind of constraint of issuing treasuries just infinitely without any issue or potential problem in the system. And so now maybe you actually do want to play the card. And if you do play the card, you probably want it to be, that delta, you want it to be as wide as possible. That would be like the conspiracy theory tinfoil hat type of narrative, I would think, of why you would do it.
I mean, yeah, I mean, the real conspiracy theory is they said they were going to do a gold audit. Elon and Trump said they were going to walk through with a live stream, and they never did it. Okay, we're trying to keep this episode, these updates tight to an hour. And so now we've almost spent half of it talking about gold. Bitcoin is better than gold. Bitcoin is much more
really
than
quick,
digital gold.
Agree with all that. The relevant thing to Bitcoin is just a couple things. In a world where the treasury just like magics $1 trillion of new liquidity into existence is like very pro risk assets, very pro Bitcoin, just by itself, right? So that's one thing. Number two is everyone is now fading the SBR for the last like few months. If you go on Bitcoin Twitter and even Noster, like there are a lot of actually gotcha reply guys in the chat saying
many such cases
that everyone was a moron for thinking that Trump would follow through on the SBR. And I think the gold revaluation concept is really interesting for the SBR because first of all, when you look at the text of the executive order, I just want to point out, like, we have a strategic Bitcoin reserve. It says it in the EO. Like, it has been established. Now, whether you think it gets overturned after Trump is out of office or whatever, like, that's fine. But everyone should be aware, like, we have one now, right? And to accumulate, the Treasury and Commerce departments were directed, not authorized, but directed to find budget neutral ways to accumulate more Bitcoin. And wouldn't it be nice if they had a sudden $1 trillion slush fund that didn't have to be sourced from new borrowing, where they didn't have to cut social programs, they didn't have to cut defense spending to start accumulating Bitcoin? Now, I think technically the CBO would still score that as not budget neutral if they did this gold revaluation thing. But I also know there are a lot of like goofy accounting tricks you can use on the back end to kind of get around that. And also at the end of the day, I think Trump doesn't really care what some nerd at the CBO says. I think he cares about the narrative of like, I didn't have to do any new borrowing, no new taxes, no programs were cut, and I was able to go acquire Bitcoin. So just like for all people fading the SBR and thinking that's not going to happen, I think you're not bullish enough on Bitcoin if you think that the biggest, greediest, most self-interested government actors in the world, all the spooks in the world, wouldn't want to acquire Bitcoin for their own strategic use, assuming that we're right about what it is, and you think they wouldn't want to be involved in it in some like meaningful way, whether they announce it or not immediately. I think you're not bullish enough on Bitcoin if you think that dirty tricks like this won't be used to go acquire Bitcoin in budget neutral ways. So to me, that's like the real upshot for if this happens, what it could mean.
I First of all, Sawzell just zapped us 5,555 sats. He says, end the Fed, repeal the Bank Secrecy Act. I couldn't agree more. Thank you for your support.
Great advice.
Great advice. I mean, so Mallers on Monday, founder of Strike, 1031 is the largest, proudly the largest investor in Strike. He had a theory that, they were supposed to release a Bitcoin audit as well. And we basically got a little bit of information through a FOIA request, a Freedom of Information request through the Rage that showed a smaller subset of Bitcoin. And his theory is that they haven't released the Bitcoin audit yet, and they've been pretty quiet about the SBR because they have way less Bitcoin than they realized, and they don't want that information to get out because Mallers hypothesized that they were embarrassed, which is definitely probably part of it. There's a lot of egos at play, but even more importantly, you don't want the price to run away from you if you're trying to accumulate, which we all know that feeling quite well.
Yeah, totally. That's the other thing too, is like with the SBR stuff, I think we've said this for a while, but like, I don't think we have no reason, or the government has no reason to make clear like what they're doing with this until they're like fully sized, right? Because the second that there's like any kind of actual endorsement of Bitcoin, like of buying more Bitcoin actively, like, I mean, there's your Omega candle, right?
Yeah,
So
market just dries up.
Yeah,
like, boom.
Absolutely. So I think you need to be fully positioned if you're the government before you in any way publicly acknowledge an SBR, especially
go on.
Especially if you're starting from a hole, like Mal was just pointing out, like let's say they have like a fourth of what they thought or half of what they thought or whatever, and like they've got to do that much more to get to where they want to get to. Like like you definitely don't want to tell people anything about current holdings.
And this goes for every major player. Like we have precedents for this. I mean, the government of Bhutan was quietly stacking in size for their size. And the only reason we found out was because they got doxxed in the Celsius bankruptcy. Like they didn't publicly tell people like, yo, we're trying to get a lot of Bitcoin, because that just wouldn't make any sense. That's counterintuitive for them to do that.
Yep. Yeah, no doubt. So I don't think we're going to get like, we're not going to get the El Salvador type mempool.space dashboard of like, here's the Bitcoin that we're acquiring every day, full transparency, going to keep everyone in the loop on what we're doing with this, right? It's totally a different game.
I mean, it'd be nice if we got that after the stacking happens. I mean,
yeah,
I love the, I think El Salvador doesn't get enough credit for leading the way on that. In terms of public stocks, Metaplanet also probably doesn't get enough credit for that. It's great to see Jack's new venture, XXI, going that route as well. Obviously, we love the mempool project. We are the largest investor, exclusive fund in supporting mempool space. It's basically us and a few angels. And I also think it's a great poster child for a project that is open source. You can run it yourself. You can run it at home, but they also have a sustainable business model. Like profitable open source projects is a trend to watch and something that I'm very excited about. I see Soap Miner zapped us 21,000 sats. Thank you for your support, sir. There was some commentary in my announcement post of this asking when 1031 was going to invest in Soap Miner. I let everyone know that his bars are in all of our showers. Our families rely on them. He's saying, so I just, before we get to to actual Bitcoin stuff, this is all related to Bitcoin now that Bitcoin is the macro thermometer of the world. He mentions the $1 trillion coin idea. This is something that I've been, ever since I became a Bitcoiner. So like over a decade, I've been fascinated by the $1 trillion coin concept. They could just mint the $1 trillion coin and buy Bitcoin with it. Wouldn't that be budget neutral?
I think again, technically from like a CBO perspective, it wouldn't be, but like, I mean, at the end of the day, they can and will make up the numbers they need to make up in whatever fashion is like legally palatable and that they can sell politically to accomplish like the objectives that they have, right? So yes, we have the printing press, yeah.
Jokes aside. So like the whole idea is that I guess the treasury can basically just mint any coin they want. And then we just have like value out of thin air. But the problem is right now is what they're trying to balance is a mandibles type treasuries situation where the long end of the curve is running away from them regardless of what they do. Like people are questioning the responsibility of the U.S. government and whether or not we're going to pay back our debts and at what inflation rate that happens at. You know, in a 10-year timeline, like a lot of inflation could happen in that period of time. So that kind of move would just absolutely destroy the treasury market.
Yeah, for sure. And I mean, look, it's like it's a relevant question for like the gold revaluation idea too, because you've effectively like there's $1 trillion of like newly created reserves out there that will flow into the system, and there will be like very likely a price inflationary impact from that as well, like depending on I guess where it hits first in the economy. But I also think like that's kind of baked into the cake now. Like, I just don't really think we're likely to see the next decade. Like, we don't have to go into like Weimar hyperinflation for, to have like, 5% type inflation, like 70s like inflation. Especially given, we just saw the head of the BLS fired last week, and we already know CPI is basically the most manipulated metric, on the planet. So they're not past making up the numbers and putting out the data that they want to accomplish their objectives. So yeah, I mean, I think either way, like whether it's $1 trillion coin, whether it's gold revaluation, I think they actually need essentially negative real rates now for the next like 10 years at least, to get debt to GDP back into some kind of reasonable range. And so like, yeah, you should probably plan for and expect, something like mid-single digit plus inflation, whether that's CPI or a real metric.
Yeah, but I mean, but the question is if they could actually pull that off. I don't actually think that's possible.
Which piece do you think is not possible?
I mean, I don't think it's possible for them to get the treasury market under control. I think they're losing control of yields, and I think I think we see rates start to run on the long side, regardless of what the Fed does. And the only real response we can have is to actually kind of lean into it and let inflation run hot alongside of it. Like, how do we even handle that?
I think you underestimate how aggressive the Fed can be if it needs to. If they have the guy in charge to do what they want to do, if they have like the Trump sycophant like partisan involved and everyone's on sides. Some news about that this week that we can maybe talk about as well.
Like if Trump nominates himself as Fed Fed chair.
Yeah. I wouldn't somebody was saying the other day, like there was some like boomer type who was trying to call like the end of basically the end of the American financial system after GFC in 08. Like he thought that like that was it. And that was the big one, and it was all going down. And he was like, well, I was wrong, because I never imagined how much the Fed would expand their balance sheet in response to that. Like I just had no idea that they would be so aggressive. And this was like on a podcast. I can't remember who were the people were that were talking, but the other guy said to him like, well, you should start imagining it. Right. Like there's no reason, like it's all completely made up numbers, and they have, unilateral control over it. Like there's no reason the balance sheet can't expand by an order of magnitude to keep yields where they need to be. The release valve is just going to be inflation. And especially like if you're not an asset owner, like unfortunately, like the regular person just takes it on the chin. Like the person who isn't benefiting from, the financial repression on the asset side, like, yeah, we have a long history of doing that. And so all you really need is to make sure those people don't like openly revolt, or, vote in, what's his name, Mondani from New York to run the country and completely, go the other way on policy. Like if you can keep the boat reasonably steady, like people will kind of I think people will take a lot on the chin. People will take a lot lying down. Unfortunately, I think we saw that 5 years ago.
It's also like it's a hidden tax, right? I mean, that's also why the tariffs are so effective. Like, has any president ever come into office and just, at least no modern presidents come into office and effectively raised taxes significantly with no one batting an eye?
Right. Yeah.
Okay. Let's move on to the next topic. I want to talk about current state of MSTR, of strategy, specifically their preferred equities. They finally seem to have bolted on a Bitcoin business model, and it's on this financialization side. They have 4 preferred equities now. The most recent one is STRC. What are your thoughts?
Well, first of all, I apologize to all the regular viewers and listeners of this podcast that tune in for high signal freedom content and have been subjected to half an hour of gold and now MSTR discussion. So I'm very sorry for that. But no, like it's either way, like whether you like MicroStrategy, whether you own equities or not, whether you own MSTR or not, whether you think Saylor is a spook or not, the reality is they've got over 600,000 Bitcoin on balance sheet. They're becoming one of the biggest publicly traded companies in the world. He is, as Odell said at the beginning, one of, for better or worse, one of Bitcoin's biggest kind of advocates and public spokespeople. So it is relevant to kind of general market dynamics for Bitcoin. What they do.
You can't ignore it. You have to pay attention to it.
Yeah,
and regardless of what happens in the next bear market, I will just put out there that I think it's unlikely that he'll be a forced seller.
Yeah.
You can absolutely guarantee that the majority of FUD will be the implication that he's going to be a forced seller, regardless of him selling or not, because we've never had a stack that large in a public-facing entity. There's a reason why Satoshi disappeared, and now we have a Satoshi level stack with a board and earnings calls and shit.
Yeah, no doubt. Yeah, I think so to get a couple things out of the way, because I probably piss off like both people who hate MSTR and all the MSTR fanboys, at least for like if they're among the nice. Dozen people listening to this, maybe piss off both sides. But disclosure, I have a very small MSTR position myself because I couldn't help myself. So I am a common shareholder in a small way. And also I agree with everything Matt said, cosign. I think that the FUD around like Saylor's going to blow up and that's going to be the catalyst for the next bear market. Like, it's a very like mid-curve take. And I think you should just look at the numbers. I think he's extremely unlikely to become a forced seller unless you think we're heading into like a multi-year, extremely rough, like 80% drawdown type bear market, which is possible, but it's certainly not my base case. All that said, none of that suggests that it's a good idea necessarily to hold the common stock over Bitcoin. Like, you very well may not outperform Bitcoin by holding MSTR. I think it's very much an open question.
I think that's the calculation that you have to be thinking.
Yeah.
You're taking on additional risk. You're giving up custody, right? Instead of self-custody Bitcoin. Self-custody Bitcoin is the apex asset, right?
Yep.
There's no other asset that has the properties that self-custody Bitcoin is the superpower. So you're adding on additional risk in an attempt to outperform Bitcoin. Yep. I'm most fascinated by the preferred equity offerings. I guess I think like there's a small subset of people that understand Bitcoin. There's a small subset of people that understand what he's trying to do with MSTR. There's even a smaller subset that understands both. And even the preferred equity, just like to set up this conversation, like part of the reason I think he won't be a forced seller, even in a long bear market, is because all of a sudden he has the preferred equities that he can tap instead of selling Bitcoin or selling common in like a death spiral type of situation.
Yeah, I think that's definitely true. I mean, the only thing that would really like make him a forced seller would be the converts that are still on the balance sheet, and even then, like there's so much capital that you have to believe truly awful a truly awful and long Bitcoin bear market would be coming. And even then he'd still have options to probably not sell Bitcoin. You might not want to be a shareholder in that case, but
right.
Two things can be true. Buying MSTR common is not a good idea. And also, Saylor's not going to be a forced seller. All that said, I do think the prefs have been really interesting to see play out. I have been, I'll say, pretty bearish on the entire pref strategy for up until literally probably like this last week.
Really?
And I still remain actually a bear on all of the non-STRC prefs, the non-stretch prefs, because you know,
With
if you look at
STRF, STRK,
STRK,
STRD.
STRF, yeah, and not necessarily bearish in terms of like how those will perform. Like they may be, you know, reasonably good rate of return. It depends, like, you know, what your benchmark is. You know, I don't necessarily think that that's like going to be a horrible, you know, trade, a horrible investment. No real call there. The bigger thing to me is, as from the perspective of an STR common, his narrative with these has been, well, this is our next move into fixed income. Like, he keeps trying to frame these as like, we're attacking the fixed income market. There's like $100 trillion of trapped capital that's in bonds, and you know, they can't really access Bitcoin. Well, we're giving them something that you know, that they can buy, that falls in their mandate. And I just think like it's just wrong. Like, that's just not the prefs, STRK, STRD, and STRF, like, don't really address any meaningful amount of like the fixed income buyers, because first of all, it's right in the name. It's not fixed income. Okay. Like, he can at will essentially suspend the dividends. And I know there are different conditions on like which ones are cumulative and which ones are not. I can't remember which is which or which within that stack. They are
He
senior
can suspend STRF, I think.
Maybe that's right. Although I thought
STRK is the one that has the call option, right?
Yeah, that's right.
So that one you can convert into
Yeah.
MSTR, so it has some upside addition. But STRF, I believe, is cumulative and he can't suspend them. Like, they're it's actually perpetual.
So I thought he still, well, so that's the other issue, but I thought he still had MSTRF, some leeway and flexibility. I'd have to go back and look.
He probably does.
But yeah. But the other piece is the fact that they're perps. Both of those things, I think, take these instruments immediately outside the wheelhouse and the addressability of all of the vast majority of like institutional fixed income capital that is out there. Because like bond math in general that these guys are underwriting on is based on, again, fixed income payments. Like, you know, if you suspend payments on interest, like, okay, you're in default, like, we're taking you to court. Like, that becomes its own thing. So the math is based on actual fixed payments and a maturity date, right? And that you're going to get principal back specifically on like a defined maturity date. And anything that does not have those features is, I think, realistically, like, very, very difficult for your average like bond investor at any like large shop to buy or even look at. And of course, the other piece is like, most of these guys need, you know, something to be rated, and from a credit rating agency. And, you know, Saylor has talked about trying to get these things rated, and maybe that'll happen, but I think that's probably a long slog, because I think there's still very little appetite among, you know, your Moody's and Fitch and S&P institutions to look at anything like this in a serious way. So you don't have the ratings, you don't have an instrument that really like looks actually like a bond. Like, it's certainly more similar than like common equity, but it's still, I think, not really a good product for the vast majority of allocators out there in bonds and fixed income. And I think you can kind of see that with like the level of uptake that they've had so far. You know, they haven't really like flown off the shelf in the way that you would have expected.
They're also brand new.
No, oh, totally, yeah. But like, so that's a good transition to STRC. Like, compare them to Stretch. Like, Stretch was radically oversubscribed, like, immediately. And I think that's the one that has like some real product market fit, because so this is the one that he's, you know, essentially kind of comping to like a money market fund. So it's something that's intended to be kind of stable in face value, you know, within like a very narrow range. You know, 98 to like 101, I think, was what the target band. And, you know, pays like a variable.
Yeah, it's 100. It's supposed to be $100.
It's supposed to be, yeah. You could think of it as like, you know, essentially like, yeah, he has a band he'll defend, but like, it's supposed to be, you know, stable value, stable principal value with a variable dividend that they adjust to as necessary, to kind of stay within that band.
They basically increase the interest rate if it goes down, because it's paid monthly, and then they just like smash the ATM and just sell a shit ton of shares if it goes too far over par, right?
They can also do like buybacks and forced calls, I think.
That one has forced calls in it.
Yeah.
At like 101 or something.
Yeah. And there's some conditions around that, but basically like that's the idea, right? But the reason I think that that's like a step function change relative to the others is, like I said, product market fit. The pools of capital that that's targeting are money market funds, which are basically, if you ever had a brokerage account, and you're keeping cash on the side to like deploy into stocks later or something, right? You could just park it in a money market fund that is basically composed of like very, very, very short dated like government bills, and it'll pay, historically up until a few years ago, it would pay like basically nothing. It'd be essentially no different than a savings account at a bank.
Slightly higher yield than a savings account,
Slightly
but
higher
you
than a
don't have
savings account.
FDIC protection, basically.
Yeah. Although
is
you
like
do
the
you do have
calculation.
there is like SIPC protection up to some level now, but
Yeah.
in any case, so it's basically, and also like we already found out like what would happen if any of these things broke the buck in '08, and also what would happen if like you had a real banking crisis, like the Fed would just become the FDIC and backstop everything. So to me, that's kind of like irrelevant now.
Yeah.
But in any case, after when the Fed started hiking rates, money market funds actually started to pay like a meaningful yield, like 4 to 5%, kind of like became something like a high yield savings account. And now so a lot of capital flowed out of savings accounts and into money market funds, just to like sit there and park it and collect the yield in the meantime. And so now you've got, I think it's like 10 to 15 trillion dollars, something like that. Maybe that's a global number. I don't know if it's US total, but it's a meaningful amount of capital in broad money market funds. You've also got a set of investors that you would think of as kind of like income investors that
like old boomers that like just do dividend stocks.
The dividend,
and they have a lot of money.
Yeah, no, totally. If you've ever been on like FinTwit, like financial Twitter, I don't necessarily recommend that anyone start that habit, but there's a whole like subset of like guy that's like a personality type, is to be like a dividend guy.
There's many
like
of
living
them.
off dividends. Yeah. Or like the
passive
guys.
income.
Yeah, exactly. Passive income.
Yeah.
And so those guys aren't like, they're perpetual in nature. Like they're theoretically want to own something like forever if they can, and just, clip the coupons off it. They don't have, the same type of like institutional mandates around, like
they have no mandates. They're worth like $2 to $5 million.
Yeah,
and they just buy dividend stocks.
Yeah, sure. And there's no risk weighting. There's no like something that needs to be rated. They're explicitly they don't want maturity necessarily. Like they want redeemability and like relative stability. But like mostly they're just trying to clip coupons and get income. And if they don't have to take price risk to do it, like and they can get 9 to 10% kind of yield relative to what's Coca-Cola's yield right now, like dividend yield like 3% maybe, like kind of these dividend aristocrats. If you look those up, those are like low single digit, mid single digit maybe type yields. Granted, they're growing over time. But either way, like that's kind of what you're looking at. So you've got that pool of capital, you've got money market funds, and both of those types of buyers don't have the same like risk weighting questions. They don't have the same like rating needs. They don't have bond math constraints that they're thinking about. They're not comping it to like a 10-year treasury or something like that. They literally just want to sit there and have like relatively stable value that gives them like indefinite income. And they've already made the decision, if they've got the capital in those things versus Bitcoin or equities or bonds or something else, that basically they want like a cash-like instrument that just pays them income, right? And that's what this is. And I think this is the first one, this stretch product, that really caters very directly to a particular and very large like market segment that he can go sell into. And I think, it's very early. It's only like they've only done, the one issuance. But the thing was like 5 or 6x oversubscribed, I believe. Everyone seemed to kind of get immediately what it was. And, I think this is one that they could go really do big size in over the next couple of years.
And if you're not like an outright Bitcoin denier, like if you compare it to other alternatives, the risk is actually way lower than what like risk to yield, like risk to dividend rate is way, way lower with this product than any of the alternatives.
Yeah.
As long as you're not like a complete Bitcoin denier and you don't think it's just going to go to zero and fail overnight, because then obviously there's really no collateral.
Yeah.
I mean, to me, I think it's interesting because like high level, why do I think it's interesting? First of all, for the first 3 products, he actually doesn't have direct control over what that interest rate is. it's market determined. So he kind of just throws it into the market.
Yep.
And then over time, like the market's going to presumably, I mean, if you're bullish on Bitcoin, presumably the market's going to bring those rates down. And the market participants are going to decide basically what interest rate he needs to pay on those preferreds. So instead of him having to like call up people and make deals and shit to borrow and buy Bitcoin, it's just like these outstanding products that they exist, and the market can determine what his borrow rate is effectively, because when he's doing ATMs on them, when he's selling new shares of them, that's effectively his borrow rate. And it's kind of like a beautiful free market-ish kind of solution to that problem. STRC is a little bit different because he set it up so they do have more direct control on what that rate is. Hypothetically, it probably should be the lowest rate of all of them because it's paid out monthly. He did block himself a little bit, like they can't lower the dividend rate, the effective interest rate. They can't lower. It's a certain amount they can lower it every month or something.
Yeah, I think it's
like
25 bips or maybe 50 bips.
So you can't just like dramatically decrease it on you. But like high level, if you think about a high level as a Bitcoin bull, right? What is he doing? He's instead of selling MSTR to buy Bitcoin, he's selling the preferreds that are paying a yearly dividend rate. That yearly dividend rate, most of them came out around 10%, right? So 10% annualized. Every year he has to pay 10% on it. Those rates will probably go down unless treasury yields go up significantly. Like they'll probably be kind of anchored to treasury yields, but they should go down from 10. But the idea is that if Bitcoin outperforms that rate of return, then instead of selling common today to pay for the borrowing, you sell common to pay for the dividends in
Over
a
time.
year,
Yeah.
and Bitcoin has outperformed them, and that should be accretive to the common shareholders, right? The Bitcoin per share for the common shareholders should go up. Like that's the high level thought process, right? And that seems compelling to me.
Yeah. Yeah. No, I think that's exactly right. I mean, from a common shareholder perspective, the problem that I think you still run into is, and I'm still kind of working through this in my head. But as long as there is a drag on your BPS, your Bitcoin per share, from issuance of the dividend, even if it's very deferred and it's like a drag that you would like absolutely accept, as it relates to like the time value of money, like only having to take the hit over, a very long period as
Right.
Bitcoin rips.
You're pushing it out.
Yeah, you're pushing it out. I think there are a lot of scenarios where if you don't also have like a rising MNAV, a rising multiple on the stock, or at the very least a consistently like 1.5 to 2x. And I don't have all the math in front of me, but I think you would probably in a lot of scenarios still be better just holding Bitcoin in the same case, right? So I think to really get leverage on it as a shareholder, like you need to believe that multiple is going to hold and probably go up. And I think there's maybe a reasonable case for that if Saylor is starting to, if he's starting to distance himself from the pack even more so and establish a durable, repeatable flywheel of issuing these things to like aggressively and quickly acquire Bitcoin in size and effectively then defer the cost of that over a very, very long period to the common shareholders. If you believe that he can keep doing that in maybe an accelerating fashion, then like arguably like there's reason for the the MNAV to actually start to rise and be somewhat durable. I don't know where it should shake out. But I think we talked about this last time. But the replacement cost of like building another MSTR, the reserve that he has, especially if you think he can kind of accelerate that flywheel of further Bitcoin acquisition, like it's not clear to me that should just be that should necessarily trend to like 1 times NAV. And so,
well, I think the real question is how he can monetize that advantage, if he can effectively monetize that advantage. And I think like the preferred shares are basically his first example of trying to monetize that advantage.
Yeah. Right? I mean, it's kind of like, it's not really this yet, but it's like, It's a little like banknote issuance during like the free banking era of
Yeah.
like,
Private banking.
private banking. Like I'm giving you something that has like some face value that I'm should hold. It should be pegged to this like value of 100 cents on the dollar, and also it's paying you something to hold it, right? Like some interest rate effectively, in this case like a dividend yield, and the market will decide like if I can defend that peg essentially, and if the market is like not confident at all that I can, then incremental issuance, I have to pay like much higher rates, right, to be able to issue again. But the collateral base here is so strong, that I think it's very likely, at least until he balloons this thing to some insane size, that he very very likely will always be able to defend this peg, at reasonable sizes. So yeah, like that's kind of what it reminds me of. Like he's talked about becoming a Bitcoin bank over time. You made that comment last year that everyone flipped out about, flipped out in a positive way. And this is the first product that I think he's issued that kind of does like look something like uh pre-Fed, pre 1913 kind of private banking type product. So that's like I see this one as, for all those reasons, as kind of an interesting like step function change in the strategy, and maybe he's actually now kind of unlocked the first way to durably monetize in a differentiated way the asset base that they have. I still don't know if you would not just be better holding Bitcoin. It probably depends on the MNAV that you enter at. Like, if you buy it at, 4x, whatever, like probably you're going to perform. You buy it at like 1.5, like, probably have a much better shot at kind of benefiting from the leverage of it. But yeah, that's going to be the eternal question here is like, why should I not just hold Bitcoin?
Yeah. I mean, the proper way of thinking about it is you're taking additional risk. It needs to outperform Bitcoin. So if it's not, then it's clearly not worth taking that additional risk of holding self-custody Bitcoin. And I think he's definitely aware of that. I think a lot of market participants aren't yet. I think there's a lot of market participants that probably don't even hold self-custody Bitcoin. I think there's a lot more retail involved than people give it credit for. Like the argument has always been it's trapped institutional money that can't buy Bitcoin directly. I think there's a lot of retail that only owns MSTR, and maybe other derivative, Bitcoin stock plays, and don't hold self-custody Bitcoin and aren't actually thinking about whether or not it's outperforming Bitcoin yet. But I think as the market matures, that is clearly going to be what buyers are thinking. Is if I buy this, is it going to outperform Bitcoin or not? And it's not just for MSTR. That's the crazy thing. Over the next decade, every single financial decision, every single capital allocation decision is going to be increasingly measured against Bitcoin. And if you can't outperform Bitcoin, you're better off just holding Bitcoin. If an investment into your own business can't outperform Bitcoin, then you're better off holding Bitcoin than trying to grow your business.
Yeah.
Et cetera, et cetera.
Yeah, I mean, I was going to connect this back to 1031 in that way. Like, it's a conversation we have with all of our founders and portcos every day. It's a conversation that we have internally with potential new investments. Like the hurdle rate is Bitcoin. We've written extensively about this. Like, we comp ourselves to Bitcoin, to the opportunity cost of just holding Bitcoin instead of investing in a company. So, yeah, I mean, as knowledge of this distributes, Bitcoin can't help but become kind of your reserve asset and your unit of account. And it dramatically changes the ROI calculations you have to make. And I really quick, I'll just say for like the traditional finance people, all two of them listening, there's an interesting connection to be made with. I recommend everybody who's listening go read the book The Outsiders by William Thorndike. It's a great book about kind of CEOs over the last like 50 years and public companies that have just done things very differently, and generated like inarguably fantastic returns relative to like the S&P for their shareholders as a result. And Odell, you said something about like making an investment in your business, growing your business might actually not be like the right thing to do relative to just holding Bitcoin or distributing excess capital to shareholders so they can hold Bitcoin, like whatever. That connects like very directly to the return calculation a lot of these CEOs are making. Like when you're a CEO, your instinct is like, I want to empire build. Like I want to get bigger and bigger and bigger. I need to go buy more businesses. I need to go open more factories or whatever. But very often, like the highest ROIC thing you can do for your shareholders is like buy back stock or, pay dividends or spin off like some segment that's underperforming or whatever. Right. And so I think like good CEOs, like really strong, like 10x CEOs have already been making this calculation for, decades. And Bitcoin just, I think, slots really nicely into that like capital allocation framework of what I'm trying to do is give my shareholders the best possible return. And in this case, like now I have to include like either holding Bitcoin or distributing to them so they can buy Bitcoin into that calculation. And so I think like the best executives in the country, in the world over the next 10 years, like will start to think about this on a much more forward basis. And I know we have several CEOs in the portfolio who are already like doing that very directly. So that's definitely a theme that is going to be key next decade.
Okay, well, we'll reevaluate. We'll touch back on all this stuff in 3 months on our next quarterly update. By the way, freaks in the live chat, if you have any questions for us, feel free to drop them there. We've already passed our 1 hour internal deadline. We have a couple more topics on the list that I'd like to get through. So let's try and wrap them a little bit on the quicker side.
That's tough for me, as you know, but I'll try.
Not do a half an hour on each topic. Let's talk about this should be a relatively quick one. Let's talk about the Bitcoin in 401ks announcement that happened 2 days ago or 3 days ago.
Yeah.
What are your thoughts there?
I mean, it's still a little, I think the EO is like somewhat light on how you like what
actually do it,
how you actually do it and how it gets administered. But yeah, like I don't know, there's a lot to say other than it's yet another kind of bullish update on like unlocking capital to come in and own Bitcoin. It's still like remarkably difficult to do. Like for example, like I have like a legacy like Vanguard self-directed IRA that I need to just like move to Unchained. But like it's maybe not big enough to kind of justify the cost, but in any case, like you still with Vanguard, the biggest kind of asset manager in the United States, you can't even buy IBIT, right? Like they haven't. You can run like
that's insane.
You can have crazy MSTR option strategies in Vanguard. By the way, don't ask me how I know, but you can't just buy straight IBIT. So the point is like we're still very, very far from like there is legitimate trapped capital in a lot of these accounts that like is going to be slow to move to like say an Unchained IRA or something like that. And having the ability for some of that to quickly and easily get into Bitcoin is I think like very obviously just like a bullish tailwind for Bitcoin. So yeah, we'll stay tuned for updates on how it actually works and how it gets administered and what the custody looks like and what it even means to like hold Bitcoin in one of these vehicles. But yeah, look, like it's of a piece with everything that we've been seeing this year in terms of like regulatory policy, just like one more positive domino to fall. The one other thing I'll add is just notably the EO includes, it's not just it's Bitcoin/crypto, but also like investments in like private equity vehicles. And if you've been paying attention at all, you might have been seeing over the last like 12 months, like there's been a lot of talk among private equity executives about democratizing access, quote unquote, to their funds. Yes, to dump on retail, like from their funds that are having notorious issues making distributions and can't find exits for their portcos. Now we need to make sure that retail has the ability to participate in that and give them some exit liquidity. So yeah, just interesting to see Bitcoin bundled in with that. And if you're thinking about one of those private equity investments in an IRA, just consider maybe just owning Bitcoin instead.
Yeah, I mean, I'm most super torn on that because I'm a free market personal responsibility guy. And I think like the accredited investor stuff is like all very paternalistic. Like people should have the right to get wrecked. But you're right. Yeah. Like almost every time you hear a scheme about democratizing access or like, like crowdfunding equity and stuff, it's almost always just like to scam retail. It's like that's just the unfortunate reality of the situation. I guess my hope high level is that there's going to be a transition where access is quote unquote democratized and a lot of these laws are pulled back in terms of like paternalistic accredited investor laws type of situation. And a lot of people will get wrecked, which is why those laws exist in the first place. And then hopefully some of them will learn and be a little bit more deliberate about their capital allocation. And the fact that Bitcoin exists is like they actually have like a highly liquid, very compelling alternative to doing that in the first place. So maybe that reduces the effect, but it is one of those things, in free markets, there's no training wheels, there's no bumpers on the pool, on the bowling, and people will get wrecked. Okay. Fannie Mae IPO memo.
Yeah. I mean,
Thoughts?
that hit this morning, I believe. It kind of goes back to it's interesting that you would get like the Swiss gold tariff, the gold revaluation memo, and this, the potential for Fannie Mae and Freddie Mac to be IPO'd. As quick background, they've been in conservatorship by the government since '08, since the financial crisis. These were the government-sponsored entities that basically backstopped and continue to backstop all mortgages in the United States.
As soon as you get a home mortgage, you get one of those 30-year fixed rate mortgages that no bank would ever give you if they were actually being logical. It just immediately gets bought by Fannie and Freddie behind the scenes. Literally like a day afterwards, it just gets packaged up and sold to them. And that's the only reason Americans have 30-year fixed rate mortgages in a highly inflationary environment.
Yeah, absolutely. It's something you definitely don't appreciate until you start kind of going through the process and you realize how rigged the housing market is in favor, theoretically, of quote unquote the common man. Although we see how it's getting increasingly out of reach for.
I think it's mostly
because of a lot of this stuff.
Yeah, it's mostly like a middle income welfare. It's probably one of the single largest welfare programs we have in the States.
Yeah, but it's funny because like this programs like this, it's obviously the Fed's expansion of its balance sheet is like kind of the underlying driver and enabler of it all. But like it's yet another example of like a government entity or a government program that theoretically like exists to, maybe starts with noble intentions of making home ownership more affordable, but also has the impact of subsidizing ownership of homes maybe by entities that shouldn't necessarily be buying them all up. And
it's the student loan phenomenon on steroids, right? It's like it drives the prices of everything up.
You're radically increasing demand.
Not in the system already, you're fucked.
Yeah. Yes.
And then there's no way to unwind it without chaos. Like if they unwound it, the housing market would collapse. And then I don't know what the exact number is, but a large portion of Americans, the majority of their savings and net worth is locked up in their home value. So you'd literally just be destroying that. You have it's like Americans pitted against Americans, and it's not a good situation to be in. I don't know how you unwind that.
Yeah, me neither. I don't think they have any intention to in the near term. And I think they want to go the other direction. And there's because right now, like the household savings base is, or at least like I guess I should say, household leverage is like dramatically lower than it was right before the financial crisis. Like there's actually a lot of like untapped home equity that could be unlocked by adding new HELOCs to people's balance sheets, right? Home equity lines of credit. And I think
just because prices have gone up so much.
Yeah. Prices have gone up. People refied at, low
Super
rates.
Low rates.
Yeah. And yes. And you've had, I think there was also like a lot of scarring after like the GFC. You had a lot of people blown out of their homes. And so I think
less variable rate mortgages.
Yes, less variable rate mortgages. There's been a lot more conservatism in the last 10 years. I think among a lot of home buyers, maybe not in the last like few years, but like over 15 years, there's been a decent buildup of home equity broadly, and I think they want to tap that now, and I think they want people to go out and like take out a HELOC and spend
lever up.
Yeah, they want to relever. So I think they're
lever up to save the country.
Exactly, as always. But again, the really interesting piece from Bitcoin's perspective, other than just like, if people like, if they incentivize, making some new mortgage program or new HELOC program where you get like super cheap financing for tapping into your home equity to go do XYZ, like, that's like a pro liquidity, probably pro risk asset type environment, also pro inflationary. But the more interesting piece on the Bitcoin side, I think directly is like of a piece with the Swiss gold tariff stuff, the gold revaluation memo. this is like potentially, they're talking about in the Wall Street Journal article that, mentions that this is going to happen. The government's looking to raise like $30 billion in the IPO. And I think only by selling like 15% of the equity in Fannie Mae and Freddie Mac. And so there's another source of potential, like,
budget
neutral value that, could maybe go into certain programs. And I don't think, even if they do all this, like, I don't think by any stretch of the imagination that it's all going to just flow into Bitcoin, but, a 10 billion or 20 billion or a humble, $50 billion Bitcoin purchase for the SBR, would be pretty meaningful, even just from the optics perspective once it's, announced.
I mean, if the market gets wind to even something significantly smaller than that, it could be a catalyst.
Yeah, for sure. So, just interesting that all of these like headlines are hitting kind of this week about potentially opening up new budget avenues for the government. Now, I will say the Fannie Mae thing has been, I think they're like people who have been sitting in that trade for like 15 years, like waiting for like any day now it's going to happen. They're finally going to take it out of conservatorship. So it could very easily still fall apart, but I think they're very incentivized to make it happen.
They're motivated
this time. Yeah.
Okay. Good thoughts. Last topic. Fed Chair Powell is going to stay with us.
Are we not going to do cycle top scenarios?
Okay, we can talk cycle top. You want to talk cycle top first or after?
Well, okay, let's close with
that. Let's talk Fed Chair, and then we'll do cycle top, and then we'll wrap.
We'll save the spicy price predictions for
super cycle top.
Yeah, exactly.
Fed Chair drama. Is Powell going to stay to the end? The end of his term is 2026, right?
Yeah, it's May of next year. I think he definitely stays because I think Trump has has pretty much already neutered him, and he has like the ability to not just by like yelling at him on Twitter every day or on Truth Social or whatever it is,
or in person,
yeah, slapping him on the back and telling him to lower rates. By the way, like you gotta like. Trump has given us just so many iconic moments and so many iconic photos. And the photo of him towering over Powell, like, a head taller than him, and like they're both wearing hard hats, at the basement, the new Fed building. And it's just like it's gold. And I think it just says it all in terms of like, he's got the upper hand, I think, in terms of the narrative, right? Unless you're like, a mainstream, economist at Harvard, MIT, or the halls of Goldman Sachs. Like, I think it's pretty clear that it's like which Batman movie is it? The one that has Bane, where he's like he's got his like financier lawyer like handler who's trying to tell him what to do, and he's like, I'm the one who's in charge here, and Bane just like puts his hand on his shoulder and says, "Do you feel in charge?" It's a similar thing here, right? Like at the end of the day, like the government's gonna do what it needs to get funded. One of the Fed mandates is to like maintain moderate long-term interest rates. And so like there's even already a statutory case for like the Fed to basically do what the government like needs it to do. I'm not saying this is like a good system or a desirable system, but like, we shouldn't be surprised if like we go back to a world where the Fed is just kind of subordinated to the needs of the state, which kind of commissions it and keeps it alive. So yeah, I think like we're heading toward, the writing's on the wall. We're heading toward a kind of a Trump sycophant, a Trump yes man running the Fed. Going to be subjugated to what the Treasury wants and what the Treasury needs. And I think Powell stays. Maybe he resigns just because he is tired of being being in that position. But there's really no need for Trump to remove him at this point. Now that Trump just had, he installed this week, one of his kind of yes men, I guess you could call him, the head of the Council of Economic Advisors, Stephen Myron, who was kind of principally responsible for architecting the whole kind of Trump trade tariff, like capital reorienting strategy. He wrote a white paper on it last year. Well, now he sits at the vacated chair, the just vacated chair at the Fed. So he's got a seat at the table until Powell leaves. And, Trump's kind of signaling that Chris Waller, who's a much more kind of dovish Fed governor who has dissented, I think, the last couple times from from Powell's rate decision, he's kind of being tapped as like the likely heir apparent. And so he can kind
that
of
last guy you were talking about. he actually tweeted Bitcoin fixes this twice. I believe.
Oh, that's the other thing. Yeah, we shouldn't forget that Myron has commented positively on Bitcoin in the past, and also in that white paper where he talks about reordering like the global trade flows. He explicitly mentions gold, and he doesn't say Bitcoin. He says and cryptocurrencies, but kind of know what that means. Gold and cryptocurrencies are likely to benefit from the regime that he kind of wants to put in place. So yeah, I mean, I just feel like all the writing's kind of on the wall here, and it may take longer than Trump wants to get to turn the ship like exactly where he wants it to go. But I'd be really surprised at this point if we don't have a much more accommodative Fed over the next like 6 to 12 months.
Even with Powell in.
I think even with Powell in, yeah, because and whether like I don't know what rate decisions they ultimately make, like maybe he still drags his feet, but I guess I should say a much more accommodative like Fed relationship, because Trump's going to have his shadow Fed chair, whoever that is, whether he ultimately wants to nominate Myron or he wants to nominate Chris Waller. He's got his guys on the inside now that he can explicitly point to, and like the market's going to listen to them ultimately. Like they're going to take their forward guidance from what those guys are saying. The closer we get to Powell kind of being off the scene. And Bessent has already talked about wanting to do exactly this. Like he talked about it last year, this kind of playbook. And so whether the Fed funds rate moves down materially in the next like few months, like no idea. Maybe they still drag their feet, but the talk track is only going kind of in one direction.
I mean, I will say that I'm been fascinated with prediction markets for years now. And first of all, it's a huge miss that the most popular prediction market in the world doesn't support Bitcoin. Hopefully we'll have a liquid Bitcoin, not liquid Bitcoin, but a liquid market that uses Bitcoin that competes with Polymarket. But Polymarket right now has a 25 bips decrease in December at the most likely 76%. No change at 18%. If you combine the 50 bips decrease, which is at 6%, that's 82% chance of a decrease is what at least the Polymarket degens are pricing it in at right now. Okay, well, we'll reevaluate that again in 3 months. Okay, last topic, super cycle, cycle top, bear markets, timeline, thoughts.
Yeah, I mean, we talk about it a lot internally. Everyone, talks about it constantly on Nostr and Twitter. What's that? Everyone's got their own like artisanal way to cut up the cycle to show that this is either somehow like the best cycle or the worst cycle in history, depending on how you want to look at it. But yeah, I think there's like I recommend people read the only like on-chain analyst, the only like relatively near-term kind of like price analyst that I think is worth listening to is Checkmate, James Check. He usually makes the podcast rounds, so you very likely heard of him. But if not, I think his newsletter is worth subscribing to if you're interested at all in seeing the data that he pulls. He put out an interesting piece this week, which is basically arguing we're about to find out if this time is different or not, and if so, in what way. We're kind of coming up on based on prior cycle timing, only based on, 2 cycles. We're kind of coming right into the period where you would expect to see basically what we have, like what's it going to be, right? How much are we going to rip? We're entering that positive seasonality from a cycle perspective. So like, where's the top? When is the a parabolic ascent going to start? Or like, is it going to start? And, in the next, I think he argues like 90 days where, we'll probably have a pretty good idea of, or I think maybe even before that, like 60 days of what's going to happen in that regard. And like, I have no idea. He has no idea. He argues it a bunch of different ways. I think it's like worth reading through. The one thing that I think is like worth thinking about with this issue is like, I saw someone say, I can't remember who it was, but like someone suggested like there is a huge amount of like cycle PTSD that people have, and everyone's so focused on like, we've got a moon by like October, or like everything's dead and Bitcoin's going to zero, right? Like if we don't have like some crazy parabolic move in the next like few months, then the whole game's up and we should all just go home. And I just think like I won't say this time is, I mean, every time is different. so I guess to some extent this time is different, but like the dynamics that we have like at our back right now, with the ETFs, with everything we talked about this on this podcast, with liquidity dynamics, with gold revaluation, with how much Trump wants to pump assets, with the need to like run it hot in the economy, Trump having his yes men installed at the Fed, the market depth that we're seeing with that we haven't even talked about, the 80,000 Bitcoin whale dump a couple weeks ago, which in previous cycles would have just utterly wrecked momentum and sentiment for months, with nation state interests that I think like you can't tell me that's not only increasing like month after month, year after year. Bitcoin and 401ks, like MSTR being able to do what they're doing. I mean, I look at all that and I'm like, I have no idea if and when things are going to really pop off, but I do feel like the cycles are like irrelevant now, in the sense that like it kind of doesn't matter what happens in the next few months. Like if we get past the next few months and we don't have a parabolic move, it's really hard for me to believe that like, well, that we therefore like once we get to the end of this like cycle period, we must have a 50% dump or 70% dump coming.
It doesn't,
because that's just what always happens. It doesn't make sense.
It doesn't
right?
prove anything.
Yeah. Like I don't see how we can have a 50 to 70% dump without a parabolic move first. So for anyone who's sitting there kind of wondering like, or anyone who's sitting there wringing their hands and thinking, if we get to December and we're not above like, 150 or something, like that's it, game over. We must therefore thereafter have like a seasonal dump of 50% or 70%. Like, I just think it makes no sense with the tailwinds behind Bitcoin and without like a prior massive parabolic move up. Like you don't get the dump without the pump, right? And so I think we do need to move past like our time-based PTSD about like what needs to happen and by when for like a cycle to be like worthwhile, or for Bitcoin to be progressing in the right way from like a price perspective. All the KPIs are there. Like, I mean, there are things that need to change. Like, yeah, you could argue different things need to be, improved about mining decentralization, but, hash rate's going one way, like institutional adoption is going one way, individual interest is going one way, the mainstreaming of this is going one way. Like, some laws I would still like to see changed, and, precedents that I would like to see set, particularly around like money transmission laws. Which we didn't get
self-custody
into
wallets
later. Self-custody.
I mean, we had the Samurai case, the Tornado Cash case, open source software.
Yeah, totally. So not everything's perfect. I'm not saying in any way that like everything's fixed and perfect and there are not issues.
Of course it's not.
From a pure price perspective though, from like a cycle top perspective, like I increasingly just think like all of these charts like mapping this cycle to the last or the last couple are just like completely irrelevant. With everything that we're seeing now.
I mean, look, I think every cycle is different. They've never been exactly the same. They kind of rhyme, right? More than be identical. I will say in 2017, like this idea that bear markets are over is not a new idea. Like in 2017, I was conservative mentally, and then we hit like $18,000. It was like a run up from sub 1,000 to $18,000. As soon as like we hit like the 16 to 18,000 range, I was like hyper Bitcoinization's upon us. And then we had the winter, and we went all the way down to $3,500. I think we're in a very strong position right now, market wise. I'm cautious about making specific price predictions, but I think we're in a very strong position right now. I'm curious, but I think the idea on two sides, the idea an extreme bull run is not possible, and the idea that a bear market is not possible is exactly why we will probably have both. And like first, that's what always happens. It's like, that's what happens. The market has to get over leveraged and overexcited and over greedy on the upside. And then at some point there will likely, in my opinion, be some kind of blow off top. And then we will have a bear market that should probably be in like the, 60 to 80% range. Maybe it doesn't go all the way down to 80%, but like not from this level. Like first you have the exuberant bull where people over leverage themselves and then say that there's never going to be another bear market. And that's exactly what causes it. And people forget how quick sentiment shifts. Once again, like, I don't even think you have to have Sailor be a forced seller or people be a forced seller. It's the panic of the concept of it and people trying to front run that happening in the first place that leads to a lot of these things. You mentioned the 80,000 Bitcoin sale. And I mean, I think that's a testament to where we are currently in this quote unquote market cycle, because like on-chain analysts saw that Bitcoin move to Galaxy before the sales actually happened. Not only historically would the market have had trouble absorbing the 80,000 Bitcoin actually like in the market, but the panic that would happen just for the idea that the 80,000 Bitcoin was going to be sold would become a self-fulfilling prophecy on that side. And it didn't, right? Like the market mostly absorbed it well. We're sitting at nearly all-time highs right now. We're sitting at $117,000 per coin.
Yeah, no, exactly. Like, to be clear, like, I definitely think, bear market. I'm not saying bear markets are over. I'm not saying, we can definitely have a 50%, 80% drawdown again. But as you said, it's not going to happen. Like, if we're right about Bitcoin, what it is, it's not going to happen from this level, right? The two options are either, I think, we bore ourselves to $1 million and we have like some sort of like, very controlled, like 20 to 40% CAGR type move up to, $1 million, like 5 to 7 years from now. And we're all like, we all kind of hate it, but we're just sitting there like compounding wealth, like over time in like kind of a boomer fashion, just outrunning the boomers. It's either that, or we're at some point going to have an insane bull run followed by like an insane insane blow off top and then a bear market. But the thing that people seem to be worried about, which is like, if X price isn't reached by like December, we're gonna, that's it. The cycle's over, and we have to come back in 4 years or whatever and just wait for it again. Is I think just completely off. But that's where all of sentiment seems to be right now.
Yeah, I mean, it's fascinating. But yeah, I agree. I mean, I feel like we kind of said almost, I don't like making specific predictions. I made one satirically last cycle that I'm not going to repeat. And people still give me shit for it. So I will tell you that I will be irrationally exuberant around wherever the top is going to be, because that seems to have always been the case since I got into Bitcoin. So if you're just following along on Citadel Dispatch and Rabbit Hole Recap, as the exuberance increases, we're probably closer to the top. John, this has been fantastic. Guys, we'll be doing these quarterly. It'll be like a mix of market updates plus 1031 updates. I just like the idea in general. I have a lot of things going on in the space and just trying to be as transparent as possible with you guys and give you a front row seat. This time, it seems like there wasn't that many questions about 1031 specifically. But if you want to learn more about 1031, you can go to 1031.xyz. John, final thoughts.
I'm sure I was debating if I wanted to throw out a price call to be spicy, but I'll
hit us with the price call.
Just say,
hit us with the price call.
So
what's
the funniest? All right, so okay, I'll throw it out there. The funniest timeline would be, and therefore the most likely would be that we get to. I don't know when this would happen. I'm not going to like make a timing prediction, but like that this cycle ends in like we have a few like major moves, and we get to like high 400s, let's say, right? And everyone's wondering if we can kind of break above to like the psychological 500 level, or like halfway to $1 million, and then one day we rip through it, right? And we don't just like go to 501 and then come back down. We go to like 550, and then everyone's like, next stop $1 million, and then that's when we dump back to like 175. I think
I can see that.
Yeah. Whenever I feel like that's how the cycle ends, is everyone convinces themselves that like $1 million is in sight. We're closer to 1 million than we are to like closer to 1 million than we are to zero. We're like over halfway there. And it's just like, turn on the jets, turn on turbo. And when you start seeing $1 million price calls with high conviction, that's when like, I don't take any off the table. That's not really how I operate. I know it's not how you do, Odell, but like that's a good time to not take out a Bitcoin backed loan.
Oh no, I've never taken anything off the table.
Yeah.
I've successfully bought every top.
Yes. Yeah. And every
I will
bottom,
say, if we rip through 500, I'm going to try to remember this conversation because I'm 100% going to be like in the back of my head, hyper Bitcoinization's upon us.
Yeah.
We're in a super cycle. So I don't think you're too far off on that front, at least. And then what is an 80% drawdown from there?
80% drawdown from there is 100, which would be like, yeah, I mean, I could see it. I said 175, hopefully, but yeah, if we go up like that and then dump really hard, like probably you should assume there's a 100K retest incoming at some point.
Yeah. Okay. Do you, and then also like, what is the timeline there? I'm like kind of thinking we got like 12 to 18 months of this bull right now is how I'm thinking about it.
Yeah, I'd say I'd be surprised if we got anything like that this year. Like I do think this is a 26 type thing. And I think just because like that's outside of normal cycle timing, like doesn't really mean anything to me. Just like look at everything that's going on. And I think there are some liquidity dynamics that'll actually be more bullish next year. So like this feels like a, midway next year type thing. Like
yeah. Powell's out in
Yeah.
May. The fall is midterms. Like you have like a massive exuberance in the fall, entering like January-ish. Like, I mean, that's at least my mental model, but I'm just going to stay humble and stack sats about it.
That's the best final thought that we can offer.
Do you have any other final thoughts for the audience besides just your degen price call that you threw in there?
Yeah, like Odell said, very proud of everything we're doing at 1031. And encourage everybody to, if you're not familiar with us, check out 1031.xyz. I think we'll continue to be the leading fund in the space, the leading Bitcoin investor, and continue to just try to be as creative as possible and investing in the best Bitcoin companies and Bitcoin opportunities.
Love it. I agree. Freaks, give me your feedback. Let me know if you enjoyed this rip. You can do that on Nostr, primal.net/Citadel, or in Fountain or other podcasting 2.0 apps. You can leave a comment there. It is appreciated. I want these shows to be as helpful as possible for you. I have Alex Gleason joining us next week. I like the idea of like these core group of return guests and then mix in new voices. I hope you all enjoyed the ham radio conversation we had earlier this week. I know I did. There's been a lot of excitement around it. Liberty Farmer reached out to me, said a lot of people are reaching out to him, getting interested in ham and Hamster specifically, which is his ham Nostr project. But freaks, as always, all the links are at citadeldispatch.com. Single biggest way you can support the show is sharing with your friends and family. We're available on every podcast app. Just search Citadel Dispatch, press that big subscribe button.